Jim, welcome back to the show. Great to see you again.
Thank you, Dan. Good to see you.
And of course, we haven't spoken to you since September 2022. A few things have happened since then. Perhaps most importantly, I now have a co-host. so we'll be hitting you from all sides for the next just shy of an hour.
That's glad to hear that's the most important thing. Yes. Okay.
Right. So I really like having you on, Jim, because you are you're focused on an area that is actually quite near and dear to my heart. One of the first books that I ever read about investing years and years ago was Joel Greenblatt's book. I forget the crazy title of it, but
How to Be a Stock Market Genius.
Yeah, that one. And it's got a lot of great stuff about special situations, which is your thing. And I was just logging onto Twitter now because I thought, oh, I'm going to interview Jim in about 10 minutes. Maybe I better look and see what he's saying about anything. But I see that you have a book coming out. Looks like it's coming out February the 18th. So,
well, that's a great plug. Well, I mean, yeah, thanks, Dan. I mean, I don't know if you want me to say, but the plug is basically,
plug it away.
I was approached by a number of people, actually. I love speaking in schools, and some of those approached me, and then they said, Jim, you've got a lot of knowledge. Can you put that down on paper for us? And you can see by my tweets, you can see by everything I put out there, I want to help people, right? I want people to win. The small investor particularly always feels at a disadvantage. He always feels that Wall Street has got something above him. But in reality, you know what? If people do the work, if people look in the right places, they're probably at advantage to Wall Street. That's a strange thing to say, but that's what I believe. So I basically put all my stuff down on paper. I said to Joe, I said it's probably an upgrade on your book, and I'm not sure it'd be like that, but it's something that, if you're an investor and you're looking for new ways of creating alpha. I'm not sure if I desperately like that word either, but sort of creating just money really in returns, then it's a great place to look. It comes out, you can pre-order it. It comes out in probably about 2 weeks' time, actually.
That's great. I will definitely be among the first buyers.
I appreciate that. Thank you, Dan.
Yeah. So I have to say, this is a totally personal thing, but I'm shocked that you still follow me on Twitter. I've followed you for some time now. I read all your stuff on Twitter, but I'm so strident and so obnoxious that when a perfect gentleman like yourself continues to follow me, I think, well, this guy must really believe in free speech because he's still following me.
Then listen, I think that I like real people, and I think that sometimes, you can play to the masses, and a lot of those accounts do, and a lot of those accounts look for clicks. But I'm just saying what I am. So, and I think that that cuts two ways, right? One way is that people appreciate you and appreciate your honesty and integrity and the way you look and the way you say, "Here's what I am." I've always been that guy. But then it can also rub people up a lot, like you say, the wrong way, and they don't like it. So, but I think in this sort of world, we're all after the same goals. In terms of investing anyway, looking to make a return and just understand what we're trying to do, and rather than be led down a garden path by some people who have some fantastic stories that just never happen, and fantastic stories sell, and I'm just not about that.
I'm just saying I'm trying to rub them the wrong way, and they're still there. So I don't get it. But
well, there's that approach to it as well.
That's right.
I think way back when Facebook, I think 2008, I think. My goal was to lose as many people as I can. You know what I mean? But I'm not sure that's
right.
The best policy.
And you're right, Jim. You're a very real presence on Twitter. You just tell it like you see it. And I don't know what you do, if you do anything at all to try to get followers. Do you do anything at all? Because you've got 38,800 followers. Just by being real about what you do, which is impressive.
I mean, like I say, it's. Yeah, I mean, shit. Look, listen, like I say, it's cuts post two ways down. There's some big accounts out there that were selling the kind of, it's an example, right? So, one big account, I won't mention it, but, you're selling the bear story from day one. This was like, post, 2021, 22. This is it. This is that fantastic kind of blind and with science tweets. And it was obvious to me, everything was cheap. certainly the fans at that stage, and you can go back to some of those tweets which I made, Meta at 88, $90, when I said, listen, this is a no-brainer. The sum of the parts is 300 at least. And, you add up all what they got. And, like, if it goes any more, I'm caving my head in and mortgaging my house to buy even more. So, rather than the kind of feeling. So I think that I try to take out the feeling, really, in what I say, because, I know that feeling, certainly in investing, will get you killed. And, I don't believe in feeling. If I'm wrong on something, hey, I got it wrong. I don't believe it. I'm not wearing it down to zero. So I think some of those accounts will really sell the bad news. And as you know, as a journo, that bad news sells. So I'm not really about pushing the bad news, just stuff that will make people money.
Amen. I may have pushed a bit of bad news now and then, but so let's talk about that. You're on a mission to help people. And, that makes your Twitter really fun to follow. Can't wait to see the book too.
Thank you.
And you want to take the emotion out of investing, take that feeling out, like you just said, which is, I have to say, all the best investors, and we've talked to dozens and dozens of them. I've been doing this podcast since I think 2018 now, and just, guest after guest after guest, if they really know what they're doing, they say that same thing. We've had one guy who said he tries to use his emotions, but all the rest say, well, I have this process to try to take the emotion out of it. Maybe we should go through a bit of that process, how you source ideas and what looks like an attractive idea to you and so forth. I know Special Situations covers a fair number of different types of plays, but I'm sure there's more to it simply than that.
Yeah, let's unpack that a little bit, Dan. So, like you say, we shop in the or we fish in the area of special situations. Now, to the normal man, let's face it, there's like, what's that? I don't know what that is. I'm going to stay away. But if I say, do you like stocks to go up? They're going to say, yeah, we do. And here's an area where a lot of stocks go up. So, the fundamental basis of that is something where the small investor or the nimble investor, I don't know if I'm a small investor, we're all investors, should really look. And spinoffs are that dynamic where, when we can go into a little bit more, but is a place where there's just inherent value. And we saw it recently with, and everyone will know this stock is General Electric. Now, if you look at, I have a Forbes blog out there, which is free. If you type Jim Osman Forbes, you can see a lot of my work there, and I give a lot away. But one of the ones was General Electric. It was just, it was one where certainly Americans were brought up on, this is a company you just got to own. This is Jack Welch. This is fantastic. And then he handed the reins over to Immel, and you know what happened then. But ultimately, what they decided in 2021 was say, you know what, to save the company, and it really was, it was a desperate attempt, we're going to have to break up into three pieces. And if you look at the performance of those entities, GE Healthcare, and the recent aviation one too, GEV, you see enormous value creation, some of the best performing stocks out there over the last couple of years. And that says everything, because it was a release of value from something like that. And listen, if you've got an area like that, well, if I say to you, you know what, there's a load of that stuff in there, you want to look. So they might not be as high profile as GE, but in fact, what we're seeing now is many companies that are mainstream doing this. You see the Honeywells, WDC coming up, Lennar, all these companies that people know and love, they're doing the same thing because they know there's inherent value creation if they're to break up. So that's really the pool. So let's just separate that bit from the start, that this is a pool where you should be looking as an investor, period, right? The rest we can go into in the process. But what I always say is, again, for the small investor, he needs to do a little bit of work, right? There's no free money out there, all right? That's never been the case in investing. So I always say that, one, you should have some sort of analytical edge over the market, right? What are you seeing that they don't? Is it cheap? Why is it cheap? Is it just a terminally declined company, or is it just cheap for a reason, right? Let's take that example that I said before, Meta. When I saw Meta, everyone was saying, I got DMs. They said, Jim, you look stupid by Meta because no one uses Facebook anymore. I was like, what? I was like, Meta makes up so many more entities than Facebook. This is crazy. And if you add those parts up, it's huge. So that was my analytical edge at the time. But also, I say, do you have a behavior edge? Now, this is a very interesting one because you need to sort of disagree with the market, and that's a tough one for most people because if everybody's selling, maybe you should be buying, right? And again, it sounds kind of silly, but again, let's take Meta the example. Everyone says, no, Jim, you're wrong. But one, analytical edge, it was cheap. Two, the behavior edge, it's like, this is going to zero for everyone. I was like, no way is it going to zero. And I took a lot of backlash, like I say, in buying this at $88. It's now, what's it, 600, 700, 3-4 years later. Then, it's one of those ones where, if you add that together, you've got a great investment. And then you can start doing a little bit more work. But that's what I say, have the analytical edge, not just cheap, because things can stay cheap, as you know, and they can stay cheap forever, and they can get cheaper, but have the behavior edge as well. And when you've got those two things aligned, you potentially got some great investments. And that's where I believe the special situation and spin-off space can be.
Do you do other types of special sits besides spin-offs? Or it sounds like you're really focused on spin-offs.
I think
that was my
absolutely.
question,
I think
Dan.
there's around 70% of the stuff we do because there's enough of them, and they're very disjointed in the way they come onto the market. But if we take some more of that, I mean, again, we're looking at insider buying, right? People say to me, and this is one that the media gets wrong all the time. Oh, so and so is buying. Oh, so and so is selling. I don't care. What I do care about is what is their track record, right? What is their track record of buying? Are they a value buyer or are they a catalyst buyer, right? Value buyers, the same as value investors, will buy and buy and buy and buy, and you'll be dead buying because you're just buying all the way down. I don't like those sort of people. So we have 40 years of data of insiders, and we know what the key insiders are, and that's very important for an investor to look at as well, right? They've got to look, who is this guy? Is he any good at buying his own stock? A lot of managers are not very good at buying their own stock. Again, they're just value buyers. They're just buying on the way down. I don't want to be that guy. I want to be a guy that is buying ahead of an event. So we have those, and we look at those type of insiders and couple that with a fundamental analysis, and we get great names. But certainly that transformational change. There's RMTs. You've had also Johnson & Johnson as well was recently. So anything that is kind of misunderstood and people are uninformed, right? Look, let's take this from the other point of view where IPOs are, and I don't like IPOs, are the most manufactured investments you can get, right? I want to sell as a broker stock to you at the highest possible price. Can you buy it from me, please? Well, no, I don't, right? Or do I want to get some other weird stuff that is just given to me like a spin-off or given to me through something else, or I don't understand the dynamics of the corporate change. So that's what I like. I like stuff where people don't really understand, or, and this is a real issue, that they don't want to understand.
Don't want to understand. What's an example of something investors don't want to understand?
I mean, certainly spin-offs overall, right? That's the first one, but also
anything complicated is what you're saying. Something that's complicated. I get it.
Yeah, anything. I mean, anything coming up, even the Johnson & Johnson, the RMT. So,
or even maybe something that they don't align
sure
with
of why
personally, perhaps.
What's that, Corey?
I was just going to say, things they're not interested in, or maybe they're not, aligned with personally, like from a worldview perspective. Even.
Yeah, absolutely. Well, let's boil it down again. I'm allowed to boil this down to what it actually is. I don't want to do the work. Can you do it for me, please?
That's it. Yes.
and can I make lots of money when you do it for me as well, please?
Yeah, that's right. And
can
it all happen quickly, please? Yeah.
Tell me now the video's going to double. I'm going to buy it. I'm going to come back in 6 months and sell. Thank you very much. Appreciate you all. So, like I say, we live in a world people don't want to do any work on anything. But certainly, whenever, again, let's take it a broad point of view because I want people to understand that if you see something that is kind of complicated, you've got to go down to the basis of why the company are doing it. Right? Why are they doing it? And then if you can get to that basis of why they're doing it, is it for strategic reasons, regulatory reasons? It could be for, market demand. IBM, for example, right, is a great one. IBM, it was a spin-off again, and yeah, we are focused on a lot of spin-offs, but they spun off Kyndryl. Now, Kyndryl was an awful company, and we spotted that listed at like $30, went down to 7. But then they restructured, done some jiggery pokery, refinanced the debt, and now it's back up at like 35. So, this can be a great hunting ground for crap businesses. That why are they doing it? Because they just want to get rid of the business that IBM don't do, just an outsourcing business. So they got rid of that. But people don't take the time to look at these things. And I think that's the overall message I'd say for investors. If a company is doing something strategically or that changes their corporate structure, just look into it. Just take the time, because that could be some real gold in there.
What is remarkable here that you're telling me is that in this day and age, with everyone combing through the market, there's still some place where not enough people are looking, is what I'm hearing. Am I wrong? That's what I'm hearing you say, which it's remarkable.
I mean, here's an example, right? So WPC, WP Carey, big company, spun off a REIT end of last year. The REIT was Enlop, NLOP. Investors want to look that up. Now, we knew there was going to be selling, right? We knew that was going to jump out of an index because natural index people can't hold these smaller names, and they just sell them, right? You tell me the market is inefficient, there's your first tick. It isn't. They just sell the names, right? It comes in like, I don't know what it is, just sell it. So big institutions just selling willy-nilly whatever they don't need to own, right? There's the first thing. So this entity listed at 50 or $60 listed. Next stop, $9. At $9, this thing was 40% of their asset value. Now, you don't need to be anyone or top analyst to understand that you're buying a cheap $1 bill, right? So, we just recommend that to clients. They're buying it to the head casing. 1 month later, it's at 22. Now it's up at 30. It's still got some of the parts of maybe 40. So, just recognizing these situations is enough for investors. And I say, I really want to boil it down to a simplicity here. If you're bothered enough to look, you'll find this stuff. And there's plenty of them. Even the big companies, there's plenty of these companies that will look. Even Finia spun off of Bog Warner last year. Finia was a company. Now, Bog Warner says, you know what? We want to separate our EV business from our old school car business. And at the time, everyone was like, yeah, well, you know what? It's all electronic cars. It's all electric cars now. No one wants this crap. So this thing listed at like 20, 22. We said, well, hold on a second. This has got inherent value here. This is worth a lot more. And then everyone said, well, you know what? Maybe people will be using regular cars in the next foreseeable future. This thing's gone to like 50 or 60 now. So, if you can recognize what people, again, analytical edge, behavior edge, you can get some great investments.
All right. Yeah. So all the things you're telling me, it kind of warms my heart as an investor, because the market has kind of soared, and and by some metrics, there's a lot of stuff that's really expensive. But you can find things, can't you? This discussion reminds me of a book by a guy named Peter Kundal, and I think the title was his book was "There's Always Something to Do." Is that fair to say that that's your outlook, Jim? There's always something to do?
Absolutely. I was interviewed recently, and they said, Jim, why is there so many spin-offs at the moment? And I said, well, you know what? Again, let's boil down to simplicity, because we can always blind people with science and say where they're coming from and why they're doing it and the dynamics. But you know what? In rising markets, Dan, what we see is companies getting full of valuations, right? We all agree on that. So on that basis, their entities are becoming full. So at the tops of markets, and I'm not saying it's the top because I don't really predict markets, but certainly historically at the tops of markets, there's more spin-offs, right? If I have something full up there and I say, well, you know what, I need to create a little bit more value, let's just spin this off. It's got a great valuation, let's spin it off. You see a lot of spin-offs. Consequently, at the bottom of markets, you see a lot of spin-offs too, because people just want to get rid of rubbish. If you remember, that's a long time ago, 2008, but also 2021 too, early 22, you saw a lot of spin-offs. People were just like, just get me off of these things. 2008, extreme example, I know, but people just wanted to get rid of their financial firms. I don't want this. This is awful. Get it out. Some of those spin-offs produce some of the best companies ever. So we're seeing that at the moment, and that's just something that, it's a guide. It's not a prediction. It's a guide for investors to take away. We're seeing an awful lot of spin-offs. So company valuation awful, but there's opportunity within that spin-offs, whether they come on cheap, where it shapes up the parent to make a little bit more value, which we've seen. And if I to jump around a little bit, what we've seen in the last year is it's not the spin-off that is been the value, it's the parent. Seen people like Jacobs, we've seen maybe like Illumina, they've spun off their bad entities, they've dumped a load of debt on them, and they've become a cleaner company. So in fact, that valuation just goes up. So that's the opportunity within the corporate change space of any sort of corporate change that the company announcing, particularly spin-offs, that the investors should look at, because there is, like I say, always something to do.
All right.
I don't want you to give away or ask you to give away all your secrets here, but for people that don't actively track, spin-offs, how are you even starting to find the companies that are planning it, are doing it?
Yeah, absolutely. No, I'll give away everything that I've got. I want people to win. You can look, you can screen these things. You can come to us. We do a small, nimble product. The website's just changing now, but you can certainly drop me a mail and ask me how. We track all those, right? So we're only looking at public announced spin-offs. Whether they do or don't, they're thinking about it. Yeah, it's on our radar, but until they announce it, there's a huge deal risk, right? There's a huge deal risk between them announcing it, but even them before announcing it and them actually happening. So I say, you know what, Corey, Dad, I'm having a party. You go, great, Jim. And 6 weeks later, is he having that party? Maybe he is, maybe he isn't. I'm not having that party anymore. And you banked on that day. So same sort of thing. They announce a spin-off, hold on to the Form 10s, and there's a process for this on all the filings that come up to the spin, and we monitor that, and eventually we'll do the full analysis in terms of fundamentals, technicals, and insider, going back to Greenblatt, and we'll have a look at whether it makes sense to buy parents, buy spin-offs. But there's a tracking process. But for a normal individual man, either come to us or just go, look for these things that announce, and then follow them and track them. But that's why I guess we're in business, because we do all that for institutional clients and the smaller clients too.
Jim, before we hit the record button on this podcast, we were talking about a very recent post of yours on X, and you were talking about the Stargate AI project, and you listed 10 key points that you thought were shaping the future, and you mentioned the major players: OpenAI, SoftBank, Oracle, UAE's MGX, and you pointed out that SoftBank shares were like up 8% right after the announcement. That strikes me as it's a catalyst, isn't it? It's not a spin-off, but it's a catalyst. It seems like your kind of situation. Are you actively looking for some way to take advantage of this, or you're just kind of noticing and posting about it?
I think there's a couple of things. I mean, one, as an investor, you should be looking to the future, right? You should be buying the future. I'm a firm believer of that, right? Don't tell me that this thing's cheap, and because everybody knows it's cheap. And if everybody knows it's cheap, why is it going up? Or why hasn't it going up, right? Or why will it go up? It's like an Alibaba, right? I've been me against the market the whole way down. It's like it's cheap, it's cheap. It's a melting iceberg. That's what it is,
Mm-hmm.
And the same with a lot of these other value stocks. Value investing, as it is dead, right? You can't tell me I have a cheap stock to buy, please buy me, and it will go up, right? It doesn't work. You need some sort of catalyst to move it to price to value. So in answer to your question, Dan, I'm always looking for the future. And, we've promoted some of these stocks before, because to take account of some of these ones that are not on there, that are byproducts. Even WDC, they're separating into two businesses in 2 weeks. One to the flash drive, one to the cloud. The cloud's big AI. It's going to benefit from this. Stock's up 4% already this morning. Investors should buy that ahead of the spin-off. SMTC, another one. They do data centers. We've got our clients in at $20. It's now $80 a year later. It'll break up sooner or later because they've got two entities as well. That's worth $100 plus. These are the stuff that we've kind of predicted because we see the future and we see the future technology. But was it desperately all those stocks? Probably not. Should you have those stocks in a portfolio? Yeah, they're great tech stocks. But the byproducts of that can be underneath that. So what as an investor, again, I'm always looking to the future. What is the future going to hold? Why is the future going to catch up with my thinking, right? And this is the kind of result of it today. It comes along, I want to invest in that future. So that's really my philosophy, to be honest, rather than saying, oh, this job's cheap on a fundamental basis. So what? A computer's going to get there every day of the week faster than you on that basis.
I see. So Stargate is just when you see somebody throwing 500 billion at something, it gets your attention, and you want to know about it, and you want to know what's going on, and have it just in mind as you look for any ideas that might be related.
Yeah, absolutely. And it goes back to news flow, right? If you're an investor out there and you're acting on news flow, you're probably lost, and you probably missed it, right? And that's the result of what you've been thinking for a while, because efficient data will stem down and you'll be lost on the line. So never react on news flow. It's gone by then. It's gone however fast you think you are.
Yeah. Also, my co-host is much more polite than me. He said he doesn't want you to give away your secrets, but I want them all, Jim. I want them all.
Absolutely, man. But buy my book. No, listen, I'll put down everything I know. And if anyone reads either the bar chart articles or the Forbes articles, I give away. I mean, I have frequency. Jim, why you give some away? Why do I give some away? Because I want you to win. And let's be real. If Ronaldo writes a book on soccer, are you going to be as good as him on soccer? Probably not, right?
No.
But
I'm you want it,
yeah. So that's my philosophy, really. I'm passionate about helping investors. If you want to tag me for information, I'm always answering stuff if I can, if I've got time.
So you're the Ronaldo of spinoffs, then?
I wish I was. He's got more followers than me, and I think he's got more money than me.
Yeah, I think he's got more than a lot of us. Followers and money, both. Is there anything, in all seriousness, it is nice when we can, we like to teach our listeners how to fish, but do you have a fish for us? If not, it's cool. But is there something right now that you really like, that you think has some decent upside to it that you want to tell us about?
Yeah, absolutely, Dan. So we got Western Digital, which I mentioned, right? Western Digital, everyone's going to have those little flash drives, right? Everybody knows them. It's a common company. I don't want to give anything too obscure. They're separating their flash business, SanDisk, which everyone knows as well, which, they tried to merge it with a company called Cloxia, I think, back in a while ago, about a year ago, and it didn't work. So they're going to distribute some SanDisk shares, and you're going to see that, and you're going to see their cloud business separate into two. So the basis of that, again, people should do their own work and do their own analysis. But this is a company that I own, and I want to make that clear. Any companies that we recommend, I will buy. As a research firm, I will buy. Why should I tell you anything that I don't own? Right? It's just like, that disclosure statement is like crazy. You don't own shares. You see them up on the CNBC, or you see where I don't own shares, but I'm telling you to buy it. What? I'm in it, right? I own WDC, so, and I would recommend it to clients to buy as well. Why not? So that's a great one where they're separating two reasonable businesses. The flash drive business aren't so good, so you can see a tail off on that, but the distribution of shares. So if you own the parent, you're going to get the spin. The spin will fall, I think. But if it falls, it's an opportunity to buy more. And you're going to get two great businesses eventually. One, a good valuation. The other is the cloud business. And we all know what's going on there too. So great separation. And just further from that, down the line, we've got like 25 years of data now in spins. Around 35% of them get taken over around a 2-year rule because the tax rule goes at that stage. So they can be acquired. And these are prime businesses for being acquired down the line. So if you want good business for the longer term, potentially acquired, there you go. There's one. There's also, I'll give you another one. Lennar, one I mentioned.
Yeah.
Big company. Big company, big house builder. They've been suffering a little bit because they've been getting a lot of debt. The mortgage rates have been going up, but there's a shift towards a more asset and land light strategy. So they're spinning off what they call Milrose Properties, and it'd be the only publicly land-based bank REIT. So two very good companies there separating. Again, that move to offload a little bit of assets, be a little bit asset light. And this is where it gets very interesting for me, and it should get interesting for investors to investigate a little bit more. Again, I own Lennar, great opportunity there. So there's two for you.
All right. Yeah, I like Lennar. I've covered that company myself.
Yeah. I've got a Western Digital external hard drive.
Yeah.
Right,
they're everywhere.
So two huge companies everybody knows, but you probably didn't know they were spinning off.
Did not. Absolutely did not.
Nope. You got a range of these coming up. Honeywell is a good one. There's loads on the calendar. So again, you won't know until you wake up one day and they appear on your Schwab, on your whatever you got, and you go, "What's that?" And a real nuance of spins is the fact that they're all sort of named a bit silly. I don't know why. It's just a nuance. But you're going to, what's this? I've got some fractional shares of some company I don't know nothing about. I'm just going to sell it. It looks like I got a profit. I'm just going to sell it. Could be your worst decision ever.
Can we talk about the Honeywell Honeywell one for a second? Are you referring to the AI AI part of that?
They've done a stripping of a lot of stuff, but I think they're swinging off their. Which one is it coming up? Because they've just made it's the Advanced Materials division. I mean, it's not so interesting. I think it happens.
Okay.
I think it happens sometime this year, actually. Probably a little bit later. But again, I don't want to encourage too many people in this too early on. Why? Because there's not the information to act on it, and that really is because what we saw were, in previous years, and I've been doing this for a long time now. Someone announced a spin-off, stock goes up. Well, like, what's the stock go up for? What does that even mean? You know what I mean? It's just like it's nonsense in terms of our brain. So again, they're planning to spin off their advanced materials business to shareholders. I'm just trying to find the date at the end of 2025. Yeah, I knew it was a while later. So it's not desperately really to look at. And, just say, put it on your radar, watch the Form 10s filing, and then it's kind of build up where the cash is going, where the debt was going. More importantly, who's managing the business, right? We see all these dynamics in spins where, I say, oh, Jim, he's a super entrepreneurial guy. He's taking hold of the advanced materials business. It's all him. He's going to drive, when you see good people taking care of good businesses, you're like, all right, he could do some good stuff there, along with the fundamentals, along with the business type, could make some great investments. So that's a little bit wild, but that was the one I was referring to coming up. But there's a whole load in between then, and just names you would have heard of too. They're not weird companies.
Okay, speaking of, let's talk about another company. Actually, I was just looking as you were talking. I was just looking at headlines, and 8 days ago is a headline: Honeywell to spin off aerospace unit now. So,
right. Yeah. Well, like I say, they're stripping down pretty good. So there's a lot of them, and like I say, we helped the activists, and we forced them very early on, way back in, when was it? More like 2020, 2018. It could have been to break up, and they kind of ignored our calls, and they moved to North Carolina, if you remember, out from New Jersey. So, and then they spun off Garrett Motion. It's a great example. They spun off Garrett Motion and Residio. Those two companies were like dirt. They put $1 billion of debt on those companies. They nearly went bankrupt. In fact, I think Garrett Motion maybe even filed for bankruptcy. But when they turned it around, GTX, I think is the ticker, REZI is the other ticker, they kind of rebounded huge. So these Honeywell are like, want to be a streamlined company, same as Danaher. Danaher have been very effective in doing this. I wrote a lot about Danaher, just spinning off. Veralto is a great one. VLTO spun off for $70. Now it's $100 odd. So these are great companies, but they're spinning off. They're trying to get leaner as the market progresses because they just have to, because that conglomerate thing just doesn't work anymore in certain companies, and you're going to see this perhaps in the tech industry as well.
All right, I want to tell everybody, if you you have no cause to doubt Jim's credentials as a contrarian, because he wrote a recent piece in Forbes about Boeing. And Boeing is an embattled company. They've had some real serious problems. They're carrying people around and in these flying tubes, and when the doors fall off the tubes and they fall out of the sky and stuff, it's really bad for business. Maybe you could just the article, actually, it's quite an article. It really it's nice and long, and it's got all kinds of good parts to it. Maybe what you see here, like, why now, after a couple of years of real trouble at Boeing, why now?
Yeah, and you know what? So we're looking at good quality companies. I mean, are we Warren Buffett? I'm not sure we are, but I'm certainly looking at good quality companies that have fallen, and why not? And Boeing appeared on the radar, and we saw the GE fall, right? We all saw that GE fall. Great company, we all had it. I mean, maybe I didn't, but as an American, you were forced to have it. It's like, why wouldn't you have GE, right? You're crazy not to. But you saw that investment fall right down. And I was looking at it, and I saw the same characteristics as GE, right? You got to remember, and this is very controversial, and I've been, kind of hit at really for a lot of this Boeing stuff, because there's a lot of articles on there that, a lot of the GE people jump ship on the way down to Boeing. And sadly, when I look for a great investment, I'm looking for good management. But everyone says that. But what is good management? Good management to me are visionary leaders, right? You look at a great company. You might not like Zuckerberg. The guy's a visionary leader. You might not like Elon Musk. He's a visionary leader. And I've said this for a long time. Look where people got real vision. And sadly, what happened in GE was you got a load of engineers. No disrespect to engineers. Great. Sort of area to be in, but are they managers? They just jumped there and they jumped onto the BA board, and they're doing exactly the same thing, destroying the value. And I went on to, this is a very interesting story, went on to a fund manager, and he said, Jim, you know what? This is when the stock was 220, and this is when I shorted it. I said, Jim, we don't like spin-offs. We buy good quality companies. And I said, okay, what is that? He said, BA. And I went, right, that's it. I'd been looking at the stock, and then as soon as I got off the phone, I shorted it. So it was a bit of a contrarian view. But, and the stock went down to 139, which we come out with, we got current clients into it around that stage. But at that stage, again, what was the behavior edge? The behavior edge was, Jim, this is a great company, blah blah blah, or it's finished or whatever. There was all that problem with the 737 Max. Americans particularly get very, very scared about that stuff too. Stock was getting sold after sold, but we also had the analytical edge, and this is where it really gets interesting. The analytical edge at 139 means the sum of the parts, if you break this company up, the same as GE, 3 or 4 pieces, could be double. So I bought the company personally, 139. I bought it at 145 as well, quite a lot. I wrote a letter to the CEO. It's on bar chart, replicated. I wrote 2 letters to the CEO saying that, as a shareholder, he has a duty to look at this value creation, which I'm suggesting, and evaluate it. And what was interesting, and not many people know this, is that shortly afterwards, Dan, I got an email from the head of the workers in BA, and he said, Jim, you know what? He said, this is my name. I checked him out on LinkedIn. He's been there for 25, 30 years. He said, Jim, we actually agree with what you said. And I thought, wow. I said, so I'm getting the buy-in from the share. I'm getting the buy-in from the workers. The share price needs it. It's going to double the share. Why wouldn't you look at that? Yeah. So now what we've seen is, no, the company didn't answer my letters at all. But what we've seen is the stock move up to, 175 now. It went up to 180 recently. But from 139 to 175. So we're at the inherent value. And if they do break up, and I see someone today looking at, some sort of 500 share price, I'm not so sure about that, but you see a double of the stock price. So that's the margin of safety I'm looking at in terms of an activist point of view. But it needs it. They're hemorrhaging money. They need to display the same, they need to assure investors, not only investors and shareholders, but also the public that they're a quality company and they're doing stuff about it. Because at this stage, we do not have a visionary leader. We do not have a visionary board. We need someone who can give you the confidence that he is doing something. And I don't think we got that. So actually, as a shareholder, I'm thinking, I need to keep pushing for that breakup. They need to do something. It has to happen. And so I think we'll see the share price go high.
Yeah, so that lack of visionary means more upside, probably. It sounds like.
Yeah. I think so, but moreover, then they're going to have to do something. They're going to have to do something to their entities. They've got 4 entities in there. I wrote extensively about Boeing. Go and have a look at it on there, or investors should go and have a look on the Forbes. It's all free. But yeah, I just think they have to do something. Otherwise, in a downturn market, the companies with a higher debt are the first ones who are going to get hammered. And Boeing not going to go bankrupt, right? I say not. I hope not. But in material terms, this stock could suffer on the way down because people won't like it. So then they're really going to have to do something. And GE were in that position where they had to do something. Right now, in a great market, maybe they don't have to do it, but they will. They would need to do it sooner or later.
Right. Yeah. It's good when there's uncertainty, isn't it? A guy like you can thrive.
Yeah, you can capitalize on it. So, but like I say, you just got to keep focused on 1, the numbers, and 2, what you're after, because this company could turn around, it could go the other way very quickly. And we saw what happened to GE; it was messy.
Right. Yeah, it's all messy, man. It's all messy. So let's. Is there another company that you want to talk about just before I move on here?
Not really.
Okay.
There's a sea of them. We've got about 25 spin-offs tabled on the calendar. Like I say, I head towards spin-offs all the time. Where the insiders come up, we like it. When there's some sort of transformation, I like it. But there's a couple there to go on for people to do their work on, and they're not happened yet. So in the next 2-3 weeks, there's plenty of time for people to do the work.
Okay. I wanted to backtrack on something. You mentioned insider buying, and I just wanted to sort of get a little deeper dive into your capability there, because it sounded like you said you had 40 years of data, and it sounded to me like you were suggesting that you knew who the best insider buyers were. Like when this guy buys, he's not so great, but when this guy buys, we pay attention, that sort of thing. Am I interpreting that correctly?
Yeah, well, we tried that. Absolutely. Again, let me take it from an investor's point of view. If you're an investor listening and you're listening to those headlines, so-and-so sold stock, he's bought stock. It's all BS, really. What you got to really look into underneath is, who is that guy? What is his net worth? How much has he bought compared to his net worth? Has he been any good in the past? Right. Let me give you a great example. So we looked at Danaher. This is one I mentioned before. Danaher is a great example. Yeah, everybody knows about it. DHR, the tickers, they were going to spin off a company called Veralto. Now, not many people heard Veralto. VLTO is the ticker. Now, we looked at the Rails brothers, who are very secretive, not many pictures about on the internet with those guys. Very secret what they do. They have a very focused approach to creating value, and they've spun off forever. And it's a great company to own for the longer term. But they've had many spin-offs. So we thought, well, hold on a second. What makes this spin-off any better from the rest, right? Okay, so we had a look at the business ones. It was a good business. It's a kind of water treatment business, right? Water treatment is just going to be there forever. Okay, so good business, first of all. We don't need to talk about the mechanics of that. So, but then we looked at well done. The Rails brothers are increasing their stake again. And then we looked at how many spin-offs in the past have they actually taken positions in, right? And it turns out there was a number of them, but they only took a position in about 2 post-spin. And I thought, that's interesting. And then come the spin-off of Veralto, they took a position of Veralto. And that was a strong signal for us because maybe they'd done, I don't know how many spins, multiple spins, but they only took a position in so many. So that was another good sign for us. Again, take mechanics of the basis of the valuation and all that stuff surrounding it, that coupled with that, but just take the insiders, then that warrants a good, strong, hard look at the spin-off. They've only taken a position in 2 others they've ever done. So that, coupled with the fundamentals, coupled with the business, coupled also the fact that, and there's one for investors to take with them, you asked me about other stocks. Veralto have a water treatment business, but they also have a coding business, like stickers and stuff on packaging, like totally weird. So what we thought was down the line, this is going to separate as well. So there's another spin-off within a spin-off. And looking at the Rails brothers, their brains, they're probably going to go for that down the line. So not only have they taken a position, not only was it cheap, not only we believe there's another spin-off coming. Again, we got clients into $70, right? It's gone up to $100. I think there's going to be a spin-off. Great long-term hold. Great solid company as well. So that's the kind of stuff that we look at, coupled with the fundamentals. So great insiders. And yeah, there's people who know their own stock, right? We could look back at them, wherever company they've been, and then it's like, yeah, Dan, he was great at this stock, at that company. Every time he's bought, stock's gone up 20, 30, 40% or been taken over. So to identify those, what we call key insiders, is quite significant, I think. But again, coupled with a fundamental analysis, can be quite a powerful to your armory.
Yeah, I love this point, and just how people can, insiders can be buying and selling too, like you said before, but also be not great at it too. I'm curious, like, has anybody come to mind off the top of your head, like who's just like a terrible insider buyer or seller?
To be honest, most of them are value people, right? Remember, value investors will keep saying to you, "I'm buying this is cheap. I'm buying this is cheap," and it keeps going down, right? Is that a good buyer? Well, it's not a good buyer. I mean, it's debatable, right? It's like, well, I'm buying it until it goes up. I mean, is that? I don't like those sort of buyers. So, in the same vein, we see insiders. A lot of them do that sort of thing, right? Look, they're in the company for going to be planning on being number 10 years plus, right? Why wouldn't I buy some now? I think it's cheap. Why wouldn't I buy some? But do they know what they're doing? Maybe not. So most of them really. So you really got to look as an investor to the catalyst advice. If you see some significant guys buying, and they're buying quite a lot, and there's a group of them, cluster buying we call it, maybe there's a CFO, maybe there's a CEO, maybe there's the legal guy, maybe there's a non-exec director, very powerful if they're doing it, right? He's the guy from outside, been brought in, and he says, well, hold on, these guys are doing some great stuff, I'm getting them back on board on that. Those sort of people, identify who they are first. And if they're significant, then have a look and see their background. So most of them, to answer your question, Corey, but on the flip side, and I know you didn't answer this, but I think this is very significant. What I remember, if an investor, if an insider is selling, there's only one time you want to be very careful, just one time, right? And it's on the way down. If a management is selling into weakness, be super careful, all right? Because that means he wants out, right? That's the only time you should be very, very careful, because investors sell for another reason, right? You and me, us three, we're still right. Stock goes up, we go, great, we need that money for all these housing repairs I'm doing. Right, let's sell some stock. It goes up again. Oh, we need a new car. Right, let's sell that. Right, you're going to sell regardless, right? It's not about, you don't think when you sell the stock is going down. You think you're going to take some profit, right? That's the mentality. So if the stock is on its way down, and here's a great example, and I know it's way old, but it's the one that everyone remembers, is Enron. They were selling on the way down so aggressively, trying to get out, right? And look what happened. So that's the one thing investors want to take from the buy side and the sell side, because it doesn't matter if we sell. We all sell stock to gain the money. Look at us, we're great. Stock went up, we made lots of money, fantastic. No one cares, right? If it's going down and the insiders are selling, and there's again more powerful if there's a group of them, just be super, super aware.
All right, so I just want to fully cover this. You're way into spinoffs. You're into insider buying. Is there any other category that's important to you as an investor?
I mean, like I say, I'm looking where people are not looking, right? If there's an IPO comes out, and IPOs for us have got less and less value over the years, and we've got the data to prove it, right? You used to be able to buy an IPO, it goes up, hey, I'm the greatest, I got in, I said 20% on the next day. That doesn't happen anymore, right? Why? Because they're manufactured investments. So what I prefer to wait, when the IPOs come, when they get decimated and everyone's puking them at the bottom, that's what I'm looking. So fallen investments, orphan securities, fallen IPOs, anything that people don't want, weird kind of structures, privatizations, i.e. demutualizations, that's a good one. Fallen spin-offs is a great one, really. People just don't want these things because they don't understand them. But anything that
SPACs?
will change the dynamics of the company.
What about, like, there was a ton of SPACs in the bubble there, 2021, and most of them, of course, got absolutely
Awful.
obliterated. You find anything among those?
Nah, absolutely awful. I think my guy went on. I couldn't make the. I always remember it sticks out of my mind. It's on the internet somewhere. But we done the study on SPACs, and we said none of these are any good. They're all lose money. And we had people coming on to us and say, Jim, if you can find the money for us, we can. And I was like, hold on a second. There's a load of alarm bells ringing in my small brain here. People want to raise money to raise these SPACs, and they were all they literally none of them produced any money. I mean, even I was one of the early guys in Playboy, run that up, sold it at like $35, and said, Jim, you're stupid. This is going to $60. And then it kind of went to zero. So it's not a great hunting ground because, again, they're less regulated than IPOs, and I don't like IPOs. So a quick way into the market is not always a great thing for investors to invest in because they're less regulatory, and it's a bad bet. I don't like SPACs. And we went on to see, just to go back to my last point. I couldn't make the interview on CNBC. It's on the internet. My guy went. He said, "We've just done a study, and it shows none of these make money." It was literally the SPAC market fell apart after that. It was just lucky rather than good, but it was good timing. And but yeah, I don't like that market at all. It's just I don't like it.
Fair enough. I'm not surprised by that answer. So it is time for our final question.
Okay.
And it's the same final question for every guest. You actually answered it when you were here before, and I hope you don't remember it because I believe it works better that way.
Probably not. I hope I give the same answer.
Okay, that's good. Well, hey, that's okay. Same question for every guest. Same final question, no matter what the topic, even if it's a non-financial topic. Same final question. If you've already said the answer, by all means, feel free to repeat it. The question is very simply, it's for our listener. If you could give our listener just one takeaway, if you could just leave them with one thought today, what would you like that to be?
Never look at P&L. Always look at risk first. Analyze risk first. Whatever you do, evaluate risk.
Yeah.
Okay. What is my downside? How much have I got to lose? And if you can quantify the risk, quantify in Boeing, quantify in Meta, some of the biggest stocks around, it was a no-brainer. I was ready to bet the house on those stocks. Okay. The rest is history. So, because there was limited downside, there just wasn't any downside. So, if an investor can do that and be absolutely sure of his downside, the rest is gravy. If fundamentals change and things change, you can reevaluate, right? You can say, okay, I got this wrong. I didn't see that come in, and all the rest of it. But evaluate risk first. And I say that again and again and again, the Twitter, till my head caves in. As long as you can quantify the risk, the upside will take care of itself. The moment you say, this stock's got so much upside and you jump into it, like this tweet today, if you think, great, I'm going to go for Oracle and Meta and all these other stocks, you're onto a loser. You don't know your downside. But that's the one thing I would say.
I love that answer. Thank you, Jim. I knew I could count on you for a great answer. And listen, thanks for being here. It's always such a pleasure to talk with you. Thanks very, very much.
I appreciate it.
All right. And maybe we'll give you a call back before another 2.5 years goes by. Maybe we'll do that. Yeah. All right. Thanks a lot.
Appreciate it, guys. Thank you. Bye-bye.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.